Welcome to Biztech's Investor Conversation Show. The focus today is on RHL Ventures, which is based in Malaysia but has a Southeast Asian focus. Now, to give us some insights, we have Rachel Lau, its managing partner at RHL Ventures. Now, Rachel, welcome to the show.
Thank you for having me, Brian, and lovely to be here.
Now, Rachel, for a start, give us a background of RHL Ventures and your journey to starting it.
So I was a fund manager previously in Hong Kong and New York for 10 years. Came back with Hamza to start the fund or RHL Ventures. We first started with some family capital, so putting our own money to work. When we realized there was traction, we opened up, the first fund to outside investors. And then, again, the subsequent funds have all been mostly supported, or 90% supported by institutional investors, either corporates or high net worth investors, but largely, corporates that have been in the markets, understand digital, and wants to be part of the digital ecosystem or the innovation that's happening right now.
Okay, and how many funds do you have right now?
So there is 4 funds. One's a balance sheet fund. There's 2 funds on the equity side. There's a debt fund, but essentially there's 4 funds.
Okay, and what sort of size of the funds they are currently?
The fund that, we're the flagship fund right now is called the Hibiscus Fund. And that's the fund that, you'll probably would want to talk about a little bit more, where, it's part of the Dana Penjana program. That's called the Hibiscus Fund. And that is, we've done the first close at 55 million US, and it's likely to be 100 million US, which is 400 million ringgit.
Okay, now tell us about this Dana Penjana program in Malaysia. How does that move the needle in Malaysia, and how does that impact the funding ecosystem?
Well, I think, for Malaysia compared to the rest of the Southeast Asian neighbors, we've had very little liquidity in the VC space or the early stage companies, right? And I think the reality of it is our entrepreneurs or our high net worth investors are a little bit shyer in terms of how they've invested in digital. I say shy because, really they're not well acquainted with it. When you look at the Indonesians, they've been quite bullish on digital and therefore also looking to support it in a much larger way. I say, I can name at least, 50 guys that have put in 100 million US in digital in Indonesia on the family side, where else in Malaysia, I cannot name one.
Now, can you tell me why, Rachel? I mean, because from your empirical evidence and from observation, why do you think that's the case?
Well, I think Malaysia has entrepreneurs who are largely 60, 70 years old. And these are the guys in the top 50 rich list, right? But when you look at Indonesia, these guys maybe are, your 70, 80. So the guys that are the 40, 50-year-olds are the second generation already. And when they're 40, 50-year-olds, they're able to have, they're steering the ship right now. They're a little bit more acquainted because their kids are 15, 25-year-olds. So they understand that digital is the next way to go. Whereas, the guys who are 60, the kids are about 30, 35. And so, we grew up in an environment where the first point of call wasn't digital. Our first point of call was, there was phones, and it's the 8850, the butterfly phones. I had the Nokia phones.
Okay.
Walk down memory lane, but we didn't go right into digital, right? We were at 2G. Well, these guys were at 3G very quickly because they leapfrogged from basically no internet to Wi-Fi right away. And so these guys are a little bit more in tune with the digital stuff, and also therefore also more willing to take bets. I say also Indonesia is interesting that they've got a much larger population. And so the e-commerce and reaching out to the islands and the archipelagos, it made more sense as opposed to like Malaysia, where it's quite flat and our infrastructure is fairly sufficient. So if you look at tech innovation, actually the funny bit is Hong Kong is the worst in terms of tech innovation. Despite the fact that on a liquidity standpoint, they're probably one of the strongest, as a city center, they're strongest, but the country is so convenient that there is no need for digital. So if everywhere, the place
That's
I used
a good point, actually.
So again, this is quite interesting. So the building I used to stay in, within 10 minutes, there was 5 supermarkets. there's no real reason for e-commerce, right? Delivery, because I can go down and pick it up. And I think if you think about it that way, Malaysia is relatively convenient as a country, and Indonesia is not. So if you're looking at Indonesia, there needs to be a digital solution to target some of the problems that Indonesia is having, whereas Malaysia have the luxury and the comfort to not worry about these things.
And also, Rachel, one of the things that is sometimes often discounted and not discussed about enough is the fact that the Indonesian entrepreneurs, because of the market size, they can focus on a single market and they can grow to a very significant size. The Malaysian entrepreneur or for example, the Thai entrepreneur can't just focus on their own markets because the market size is just not big enough.
Yeah, but also at the same time, the Malaysian guys are a lot more complacent and comfortable, right? Compared to the Indonesians. I mean, when you've got more people, you're going to be a lot more competitive to begin with, and that's why China's probably the most competitive place I've ever been. And so if you think about it from that standpoint, yes, I think Indonesia is a large market, but the person who goes regional is the person who wins. And so if you look at Gojek versus Grab, Grab is a clear market leader despite the fact that Gojek has won Indonesia, because Indonesia is a hard market. So like even if you want it, someone else can come in and disrupt the markets, right? And so the idea is obviously to be a regional play, not to be just an Indonesia only play, because Indonesia is, I don't think if you're number one, it would be sufficient for you.
Now, I want to talk to you, Rachel, about the investment strategy for RHL Ventures and how you support your portfolio companies.
Okay, so I guess, in terms of support, we do a number of things, right? For us, it's, the business networks that we open up very quickly. Another thing is obviously the financial, whether, it's a debt or equity, the ability to get, cost of equity or cost of capital as cheaply as possible is obviously, a strength of ours. Another thing that, we look at a lot is policy making. So I'll give you an example. There's a company that we've invested in, obviously we haven't announced it, that is doing delivery. One of the things that they wanted to do was bring in scooters or electric scooters, because we're a lot more environmentally friendly, and we also want sustainability in everything we've invested in, right? But the Malaysian law doesn't allow for e-scooters, or e-scooters have to be classified as motorbikes and therefore have to be on the streets.
That's right.
When you're doing 6 kilometers per hour, the poor driver might get run over by a car. So technically, on an e-scooter standpoint, you want them to be on the
pavement.
Correct. But Malaysia doesn't allow it. So, I think some of the things is obviously going to DBKL and telling them, hey, this is an e-scooter, and the poor guy is going to be run over by a car, to force him to be on the road. But, the way they see it is there's an engine that's a motorbike.
Absolutely. And so this is the innovation that actually they're missing in terms of transportation, because the other thing is also e-bikes.
Yes.
So that's a huge, that's a broader picture in terms of not only from a delivery and stuff, but from an overall transportation perspective. There's some interesting stuff, especially in Singapore, that's being done.
Yes. So yeah, so again, good example, right? E-bikes, now, so we've gone to e-scooters and we say, hey, let's talk about e-bikes and let's talk about charging stations. So for us, we're writing, we do quite a bit of research here, and so we're pushing white papers out to say, hey, these are the things that we think should be relevant to the market. How do we push the market that way? So it's lobbying from that standpoint, right? How do we be smart and market leaders about the things that we have to do? And again, that's another value add that we do, which I don't think a lot of the VC guys do. So we spend a lot of time in terms of forecasting trends, directions, and so again, we do a lot in terms of research. And then again, that adds value to strategic values to the startups, and they're able to leverage off some of these things. But again, as a portfolio or an ecosystem standpoint, we've got enough of portfolios now that they can bounce off ideas from each other, or essentially like cross sell with each other, right? So like for example, Fefifo, which is a co-farming company. Once you do the farming, we amalgamate all the produce, and then we try to sell it to someone. And so the B-Life can be this person that sells it to someone, right? And so, we're selling it from Cameron Highlands, which is 3 ringgit per kilo, to Singapore, which is $3 per kilo. And again, there's an instant accretion over there. And we've seen that happening a lot more with our portfolios.
And also, Rachel, could you give us an insight into your investment strategy, the type of companies that you look for in your portfolio? And obviously that's evolved over the last 5 years. I think you started in 2016.
Yes. So when we first started, it was US, Southeast Asia, and then we realized US was a bit too hard to do because we were just not around the corner. So we focused on Southeast Asia with the idea of, obviously, if you want to be a regional play, you have to take Malaysia. Malaysia's been, again, an interesting country for everybody because, despite, the fact that it's a small country, the risk reward for the country is relatively high. When I say risk reward, if you think about Vietnam, Thailand, and Indonesia, the risk of going wrong is very high, right? And so when you talk about, of course, from a reward standpoint, it's very high, but then, you've got to think, as an investor, you think about risk reward.
Yeah, and also, Rachel, I think from the risk reward standpoint, it's the fact that there is a discount factor compared to a Singapore startup versus an Indonesian startup, and then the discounted valuation for the Malaysian startup.
Correct. And so, yes, so precisely that, right? And so, we've now focused on Southeast Asia with the view of obviously helping, the company grow in Malaysia, either, from an engineering team perspective or a financial back office ops team. So I think these are the things that Malaysia do pretty well. Again, the engineering also came from the fact that we've got good hardware companies, the hard drive, the hardwares, your Intel, your Western Digital, those guys were here. And so these guys are good engineers, and now we've just got to move them to software engineers, right? So again, the smart guys, our education is relatively good. We speak multiple languages. So if you're doing, either consumers, back office, or you're doing more HR, finance related stuff, I think we're quite well equipped to do that. So that's probably the shift a little bit in terms of our key focus areas. But essentially, we invest $1 to $5 million tickets into Southeast Asian companies, Series A, Series B. I say we've done a little bit of C and we've done a little bit of C and D, but that's largely not our bread and butter. Although I think as the funds go bigger and we've invested more, we have ended up doing more C and D as a natural progression of us supporting our portfolio companies.
Okay, now give us an example. Now you've got some interesting portfolio companies. Coffee Meets Bagel caught my eye because obviously that's in a space that has done very well in online dating. So you've got the mega IPO at Bumble, and then the very successful company over 2 decades, Match.com. Tell us about how you invested in that business and what's the journey been like so far?
To be fair, this one is a portfolio. It's a legacy portfolio, right? I said we invested in the US, and so we're not that hands-on with Coffee Meets Bagels anymore. They're still around. We still keep in touch quite a bit. We get the updates. Essentially, the thesis was we wanted people to have deeper connections, not the one-night stands and the hookup culture, which we strongly don't believe in. But essentially, Coffee Meets Bagel was resonated with us. It was 3 girls, Stanford, Harvard, McKinsey, all the nice brand names. And these 3 girls were sisters, very smart. Again, when they told us about it, they were looking to come to Asia. And to be fair, they're still planning to come to Asia. COVID obviously didn't help the setbacks in terms of the new plans of hiring in Asia. But essentially, the idea was obviously to come to Asia a little bit more, and again grow this part of the world. And so so we're not super hands-on with Coffee Meets Bagels, but they're a good company.
So it's a good company. So what sort of numbers did you invest in them, and where are you at in terms of your return up to this point?
Oh, I don't think they like me talking about their valuations.
Okay, but how much did you invest and at what stage did you invest? That you can tell us.
I'm not sure. So we went in on a Series B level.
You went in on a Series B. Okay. Now you also like health, obviously. You've got 2 health companies, Naluri and Health Metrics. Tell us about that. Digital health is obviously something that you like.
Yes. So I think with COVID happening, we've realized obviously the importance of mental health. We've done a lot more in terms of supporting mental health. People have been struggling. We've been quite aware of that phenomena. And for us, then Azran was the right guy to back. In that sense, we've known Azran quite a bit from his AirAsia days. Obviously, he's a good guy. And the idea was obviously to support corporates to give out mental health wellness to their portfolio company. Oh, sorry, to their employees. And so, that's what, Naluri does on a bread and butter. And I think now he's just gotten 2 government clients. I think the Ministry of Health is just onboarding him at this point. Ministry of Health has just onboarded him, given that we've just invested in the beginning of the year. So I think as a hey, since we've invested, we should really try this. And I think it's been helpful, right? If you look at, if you look at the suicide rate during COVID, I think it's something that we look at a lot more carefully than what other people do. And I think for us, when we invest, we think about how to do good, because by doing good, we will do well. And so that's an important theme for us. So that's probably Naluri. On health metrics, so I came back to Malaysia in 2017. And then what I realized very quickly was there was no good healthcare protection in Malaysia. More from an insurance standpoint, where everybody had to pay out of pocket. And so when we spoke to health metrics, they were trying to disrupt that. And so they're trying to give everybody a chance for good healthcare and cheaper healthcare, right? So they target the corporates, and by targeting the corporates, they get the consumers. So essentially, these guys have about 1 million users on their platform. So very strong company, which nobody really knows about, because essentially they target, your CIMB, your public bank, and so or your Berjaya. So they target those corporates.
Yeah, so they onboard people very quickly.
Correct. I mean, not very quickly, because
but in terms of scale.
Yes. So corporates in Malaysia aren't the fastest moving, things.
Yeah.
But I think the reality of it is the solution has worked. We've realized that the average age in Malaysia is 31 years old, and so also that translates to the fact that we don't go to the hospital that often, or we don't go to doctors that often, right? Yeah. Insurance was charging all these guys 12 times visits a year, which is not that far-fetched, which is once a month, right? But if you think about it, do you go to the doctor every month? You don't.
No, but yes, some people do.
Well, some people try to get the MC, which is a bit different. That's the second story, right? Then the first story is we realize actually on average at the 29 to 31-year-olds, which is the average age of Malaysia, they went to hospitals they went to a doctor 5 times a year. That's the average, right? If you take out all the 1 million user base, we realize that it really is 5 times, really not 12 times. And so we say to corporate, we say, hey, instead of you paying for 12 times, because technically for your premium, if you divided it up, it's about 12 times per visit. If you're talking about 80 to 120 ringgit, so then it's about 12 times. So we say, why don't as you go, you pay for the insurance, and therefore it's only really 5 times. So on top of that, then when these guys are getting paid, it's all getting pinged in their system. So when people go in for a doctor, the employer or the supervisor knows that they're in a hospital or a doctor, and the MC automatically comes up. So this is also the panel of doctor that's onboarded. So there's no way to cheat the system anymore, because it's all digitalized. And so if you're suddenly every week having a flu, then we know either you're a really poor employee, so we should definitely find a way to figure you out, or you're dishonest.
Yes.
So they're great.
Now you've had one exit, Sidestep. Tell us about that. How you invested in that, and what was the exit like?
So for Sidestep, again, it's a US company. So a lot of companies that you're talking about are the legacy companies that we've invested in. We invested in 2016. And so it's been a while since they got acquired. 2017, I think 2018. They got acquired by a larger company that was wanting to do some of the ticketing stuff in the US when concerts was still all the rage. I mean, it's not so much now, so I'm glad we
yes. But that's going to come back. So what sort of return did you get from that investment?
So for that one, I think we got a 3x on that.
Okay, excellent. Then those are legacy companies. Tell us now about your latest portfolio companies that you've invested in.
Do you want exits or potential exits, or do you want,
Well, you can talk about some of the new investments you've made and some potential exits that potentially that you're looking at.
Okay, so there will be one potential exit that should be announced by the year end, and that will be a good one. It's a recognizable brand by everybody, and that I can promise you, because it's probably also not that hard to guess if you look at the portfolio, because there's not that many brands that an average consumer would know. So they're looking to IPO. Oh, sorry, we're looking to do a trade sale on that one. And that one we're getting a 6x on it. So that's a relatively good return.
Yes, absolutely.
And again, that would do Malaysia pride in terms of that. So that's one exit. Another company is gearing up for a IPO, and that is, that's probably I want to say between an 8x to a 10x, depending on where the IPO price lands. And that one is really next year that will happen. We've already chatted with the bankers. Seems like interest is pretty strong at this point, and so we're doing a pre-IPO round before we go there. But by the end of next year, we'll probably be doing the IPO. So that's the second company. And those are portfolio companies that we've invested in. I think the one that resonates with us the most is obviously Fefifo. You just
interviewed them. Yes, that's right. Very interesting company.
Yes, and I think that the reason why we really like it is obviously it gives back to the farmers and the younger farmers or the younger agriculture degree holders that want to go into farming, and obviously making it sexy again. Another thing that we've invested in a much bigger or in a pretty large way is a company called G Life. And that company does procurement. I spoke to you about how they've tied or looking to tie in with Fefifo a little bit stronger. And they basically go to Cameron Highlands. They do fresh foods. A lot of the food is procured in JB. We were there I want to say 3 weeks ago to look at the processes, and then essentially after that sending it to Singapore. They are a very holistic platform, not just procurement, but they also have Toast in the US. They bought that as well. The GMV is 800 million US. So this is big numbers. And then from a revenue standpoint, it's a pretty healthy number. And so I think they will be raising a next round pretty quickly. And so there will be some headlines coming soon for these guys.
Excellent. Sounds like you've got quite a hit in your pipeline. Rachel, it's been a fascinating conversation, but before we end, any final thoughts or words you'd like to share with us before we go?
Well, I think Malaysia has been an overlooked market, and I would like to obviously urge most investors to have a look at the market a little bit closer. And I think, with what Penjana has been doing over the last couple of months, I think we need as much help from the GLICs or the sovereign funds to help, spur the ecosystem, right? It's really not just one VC. It's going to be multiple VCs. It's going to be fund managers. People talk about, how do you get, more listings? And I'm like, get more private companies. And then how do you get more private companies? I'm like, spur the ecosystem. Funding is a big deal, but not just fund with the right amount of funding and with the right amount of fund managers. You'll be able to get, the legal, your lawyers, your accountants, your ancillary services does well together with it, right? So I think we've got to be a bit more long-term in the ways that we look at investments. Malaysia is quite short-term. It's always like, what do I get? The way we look at a portfolio is very different. We look at what happens in the next 7 to 10 years. We also understand that business are cyclical, so you don't ditch them, when COVID hits, right? We've got to be there true as a partner. And so how do we, walk beside you whenever you need us to be?
Rachel, thank you very much. I thoroughly enjoyed our conversation.
Thank you so much, Brian.
Now, I'm Brian Fernandez, and we've been speaking to Rachel Lau, the managing partner at RHL Ventures, on Biztech's Investor Conversation Show. This video will be on our various social media platforms, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.